What's up everybody, Tom here with another video. In today's video, we're going to be discussing together the biggest things happening in the markets around the world right now, including our technical analysis thoughts on the S&P 500, Nasdaq, Bitcoin, Tesla, gold, dollar index, and others. Yesterday, the dollar index did something strange. It broke out and the market also started to grind higher. The question is, what's going to happen ahead of this jobs report? Stay tuned to find out more. Alright guys, well as we like to do on this channel, let's take a look at the heat map and the market for the end of the 30th of June 2021. And as we mentioned, this could be the calm before the storm. We have the jobs number coming out Friday, 1 hour before the stock market opens. That is the non-farm payrolls number. And you can see the market is really trying to figure out what its next direction is going to be. Yesterday we had banks up, we had some of the techs down, some defensives up. It was all around, kind of just a very slow day. And it was more about playing catch up for things like the Dow Jones. You can see over here, the Dow Jones up 0.61%, the S&P 500 almost flat, Nasdaq pretty much flat as a tack. Not much to be had. Now, we thought about this yesterday in the live stream, and it made sense that we were going to have a cooling on the Nasdaq a little bit, and that we were probably going to have a bit of a sideways market on the S&P 500. There was a small breakout, though, that you could have day traded. We might take a look at that later, and we are getting clear signals here for where pullbacks for the Nasdaq could and should be met by some type of buyer demand. Let's talk about the sectors. So energy was finally up. We, of course, had XLP, that's defensive kind of consumer staples moving up. We had the financials and the rest lackluster. As you can see, just not very much movements throughout the session. Now, if you were lucky enough to be in certain biotech stocks, they really did run. Things like CRISPR, which we've been talking a lot about in this channel, Beam and anything to do with the CRISPR technology were out of this world. We had 8% plus on some of those through the day. Some phenomenal movements. Let's get stuck into the technical analysis though and have a look at what happened with the dollar index. So as we suspected, the dollar index was breaking high. Now we had a very good trade here where we breached what I like to call like a 1, 2, 3 or 1, 2, 3, 4 resistance. We've spoken about this level several times on the channel so far, and that's led to bullish into the previous peak, the 92.40. Now, this is a pretty key zone, and it's surprising to actually have this here before the non-farm payrolls, specifically over 24 hours before the non-farm payrolls. Usually what you expect a market to do is a market will move its way gradually towards a resistance before the earnings. It will get there usually a few hours before, and then it will look for a breach zone. So will we now see some consolidation here before the non-farm payrolls? I mean, we clearly can see on this chart, if it breaches this zone, where does the dollar index go? 93.40. What's that getting close to doing? It's getting close to creating an incredible double bottom here on the weekly chart. This cannot be understated. That's an incredible double bottom. This is an incredible level for it to get to. If it breaches here, we're talking about longer term strength for the US dollar. And again, the 50 exponential moving average on the weekly is in potential of getting breached. So everything comes down to the jobs number. And what we know traditionally is that if the dollar index is rising, usually that means risk off in assets. Now, what can risk off also mean? Well, sometimes people look at it from the perspective that can also mean gold is going long. So people are starting to hedge their bets against maybe the S&P 500, etc. Now, gold has been well known to have crashed through our trend line. And we talked about this breach point, this 1760. And I was very specific on, although these are incredibly negative candles, and to get it down to 1760 made sense, by not getting a proper daily breach underneath the zone, not enough. We didn't get enough information there. We had to be very, very careful. We can see here as well with the price action, what have we had on the 4 hour? We had a low, fair enough, it cracked below, 8 hour did too. It moved up, and then it started coming down, but it didn't do our normal sequence that we like to see here, the lightning bolt. It just kind of came down, instantly made a long leg doji, and then reversed on that position. Now, when this occurs, you need to be very nimble. If you've already placed a half a position or a third of position towards the short, I can totally see your point. But you've got to be nimble here, and obviously many people would have got stopped out by this move. Now we go back into the channel range for gold, and again, we have very little direction. If you're going to say, which do I think is probably the strongest side here, I would say, well, look, there's going to be a little bit of resistance possibly around this level. You can see the previous support. This is where I would expect some selling to come in, but I don't think it's highly statistical either way. So we're going to have to play it out, wait for the jobs numbers, and then make some better informed decisions after the jobs numbers in the US. It's all about understanding the type of market you're in, and this was a very tricky one. So if you got caught out, just remember, sometimes this is going to happen. How do you read the chart? Long leg doji on a big time frame, rejection from that point, and it's not showing that momentum towards your side. Often things are not all that they seem. Let's go over now to US oil. So I've been zooming in here. Hopefully you guys like it. By the way, I always respect criticism in the comments if you've got some that's constructive and is about improving the stream here. So someone said zoom it in, Tom, if you can, and hopefully this does look a lot cleaner for you today in the viewership out there. Hopefully it's a bit better on mobile, etc. So we've got the resistances up here for US oil, black gold. We've got the supports. We know that we're trapped within a channel range. We know that if we breach 74.21 and close with the 2 hour above it, there's a good chance that we go to something like a 75.76. And we'll continue to watch this one, but at this stage, stuck within the range, again, ahead of the jobs number. Let's move over to Tesla. So we've got this zoomed in here, and you can see the $700 target is kind of the expectation that we're looking for. So I don't mind it coiling here, but I would love to see a 700 breach. If you want to think about when does participation come in, when do the other traders start to really get involved here, I believe it's going to be somewhere around 700 from a technical level. We breach that zone, and all of a sudden we open up some serious movements towards things like the 750 over here. So you can see the 750, 760 zone really becomes open. If it coils here, the longer it coils before a breakout, the more it's had time to reset all of the indicators and get some explosive types of movements. And as I've mentioned several times with Tesla and other kind of more social stocks, is that it's all about also what's the discussion doing. And yesterday we saw Tesla continue to rise in social discussion. So if it does breach, I expect social discussion at the same time to increase. And again, that to be an extra little bit of information that we can use to make a better informed decision. Speaking of better informed decisions, we got a great super chat yesterday. It was talking about the difference between the Russell 1000 growth and the Russell 1000 value, and how value was falling over a cliff. It basically was looking something like this, and Russell growth was going very, very strong. Now, if we look at the Russell 2000 here, this is the smaller companies, you'll notice that we have a clear 234 resistance. We also have breached a few times. We haven't breached, so we have unfortunately never been able to close above this zone. And it looks kind of like it's waiting for that zone. Do we have alerts set up here? Yep, and we'll continue to cover it on the channel. But what I wanted to mention was, if you look at the Vanguard Russell 1000 ETF here, what has this been doing the entire time that we've got that coiling on the Russell 2000? It's actually been exploding out. So there's plenty of new companies in the 1000 that are actually improving and constantly increasing in price. So what that's telling us is those companies stacked to the top, the small companies stacked to the top, are actually making big moves, and they're becoming what could be the new future of things like the S&P 500, the new future of the next decade of investment. This is, of course, what Kathy Wood also discusses at great length. So we've got breaches out here, and this has actually been the better index to get into. And it just shows you've got to always think about the market. Hey, I believe in the Russell, but do you believe maybe in the back end? Do you believe in the value, or do you want some of the growth? There's so much opportunity to get different indices that target different areas. So that's the Russell 1000 versus the 2000 there. Let's have a look at the US 100, and you'll notice on the futures, this has continuously come down to the 2 hour 20, which has always been our very strong buy zone. We've got 1, 2, 3, 4 touches now, looking for, of course, a new peak and then any touches in the future to be met by buy demand. And it's a pretty strong level. It's continued to really find itself at these zones. Now, what you don't want to do, traders, is you don't want to really look at it as, oh, I want to buy it again if it doesn't make a new peak. Remember, it's those 2 steps forward, 1 step back, 2 steps forward, 1 step back philosophy. If it just comes down and tests the 20 again straight away without making a new peak, it is weakening, and we don't want to be part of a weakening kind of position. If you think about the real market and you weren't just trading, of course, the futures, it hasn't actually always been coming back to the 20 yet. So notice here, we haven't even hit the 20 in the real market. The real market just always held so strong when the true volume comes in. And nothing has changed in our thought process here. We're still on a big bull run. We're still looking at this massive ascending channel here for the QQQ, for the Nasdaq. And until it hits these peaks, there's not much that we can do about really thinking that there's bearishness here, other than it's moving away from our mean reversion, the 20 moving average. But other than that, it's still bullish at this stage. Jobs numbers may change that. Let's have a look at a couple of sectors. So we did this on the live stream last night. I thought it was really beneficial. We were taking a look at each sector and targeting different things. This is the healthcare sector on the 2-hour. You'll notice the breakout of the channel range, which of course happened at around that 125.50. When this type of thing occurs, you always want to be dialing in on stocks that you like in the healthcare sector. And you can say, okay, well, is there some value here for me? We've seen a breakout in the entire sector overall. That's showing a strength of the sector. Maybe there's a specific stock that you want to target. So this is XLV, and I think it's pretty clear for everyone to see that this thing's been in a channel range. And another thing I like to do is go back through previous history and see, well, when it does breach these zones, does it go on a bit of run? It did there, then arguably pulled back to the conservative and then move forward. So when this sector runs, it does certainly move quite heavily, and you can see it's kind of just like coiling at the top. So not a negative thing here for the healthcare sector. And again, always look at everyone if you can and if you have time to look at the specific things you want to. If you're trading something in technology, you should always be looking at the technology sector as well, just to get an idea of where it's breaching or where it isn't. US 500 got through the 4,300 yesterday, so we've got to a new all-time high again. You can see here the pullback back to the 50, followed by some nice bullish momentum. We kind of thought that there might be a little bit of weakness in the morning. By the time it opened, it went weak really, really quickly and then instantly found some buying pressure. Not much of a move. Again, non-farm payrolls is holding this back. If we think about the weekly, we're well above any of the previous kind of supports now. We're going towards our community trend line. Here's our community trend line that we've been looking at for a very, very long time. And unless the jobs numbers do something to shake Wall Street out, it looks like we're just going to keep grinding higher, potentially for the end of June. We're already in the end of June into July. And maybe July is still going to be what it is, generally a statistically bullish month. Let's move over to something that's less bullish at this stage, and that is Bitcoin. Bitcoin. You know, you look at this chart and all of a sudden you're saying, oh, on the 2-hour, have we got a head and shoulders here, Tom? Do we have a left shoulder, head, right shoulder? Very disappointing on this. I mean, you can see the last stand for it. It's around that 34,000 flat. At the time of this recording, we're at 34.2, 34.3. This is certainly a head and shoulders. You can see it on the 2-hour. I've said this for a while, and I guess I'll say it again, is that Bitcoin is notoriously terrible on the technicals. If I was to look at this technical and I saw buying pressure, resistance, long leg doji, breach, close above, and that was a stock, bang, guys. Hell yeah. Great trade. And you know what? Bitcoin isn't going to change the way that I approach the market, because I understand that this market is filled with FUD, it's filled with mainstream media, it's filled with all sorts of concerns about government and fundamentals that completely go over the technicals. But at this point, there are really good technicals showing up on the charts, but they're just not working out. And I think you've got to understand that sometimes markets do this, and the only real things that matter are the news in this market right now, and of course what the giant whales are doing. Now, the whales at this stage, supposedly according to this chart, have still got their shorts taken out of the system. But if we've seen that spike and then all of a sudden we're getting through the 34,000, unfortunately we could be coming back down again. And I've mentioned it several times with Bitcoin. You know, my biggest concern for Bitcoin is not so much where it is right now. It's if it ever breaches underneath this 28,500, 28,000 support or 30,000 level again and closes a weekly. Because at that stage, I could really see it going back to 20. And I kind of don't want that right now for a lot of people. I know a lot of people have really started to buy in this area here. And I can definitely see why. It's just not as technical as it has been. I'd love for it to come back. And you know what? I want this thing to breach back up above 35.5 right now for you guys. And then, unless you're short, because then of course you want it to go down. But then, and then continue to move up, because just the technical was good. And again, I would always go with that type of technical. Never lose faith in what you're doing if it makes some type of sense. I think that's a really important point. So if we're just reiterating some of the big news that's coming out over the next couple of days, of course, we do have unemployment claims 8:30 a.m., 1 hour before the open in the US. This is the New York time. And then, of course, on Friday, we'll be live streaming that as well. Non-farm payrolls, 8:30 a.m. It's going to be fireworks, guys. Make sure to subscribe. Hit that like button if you enjoyed the video. And we will see you live for the open as per normal. Speak to you soon, guys. Bye for now.